Good day, everybody. Brian here from quantlabsnet.com. We have mission accomplished with our agents running with full automation of news gathering, optional but important for my paying members at Quant Analytics, and the creation of bots, trading bots based upon the news. So I'm going to give you a rundown. Always remember, this is connecting into Rithmic for futures and options data. I cannot show the source code because of the terms of service from Rithmic. Anyways, I'm going to go over the highlight though. Right now we have basically an architecture that looks like this. So as soon as I've looked into the different processes, I've talked about them in a variety of videos. It's all done in Python, 100% generated by AI. We have here phase one, which is called the news agent, which really runs this program, Python, gathers all the news. I'll show you the details of that. Then we have a PDF report that gets created. Then phase three, we have bot generation for all the trading bots from all the news. And also, as an option, I can have it automatically launch the bots. I'll go into test mode. I could run as little as 15 minutes, half an hour. I can see which ones will form within that time frame because it's running against real market data from Rithmic, but there's no trading in this trading simulated. The next step I could take with this whole setup is to be able to take those profitable trading bots and then move them into a production live trading environment. So we've got here basic file structure. So just remember we have news feed, trading report. We also store all the bots in unique date along with the time. And then we have all the bots stored. So each batch that we run will have a news feed output of a raw file. From that, we are able to create the PDF, and then we also have the running bots as well. So that's the file structure. We've got the breakdown of each file, blah, 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 blah. Now, again, I'm not going to go past that. It's just I'm using this for my own purposes. So again, coming back to VS Code, we've got a way to run everything, run all in Python, and then these are the bots that get created based upon the latest batch of news. So let me show you the output of this, starting at the top here. So if I run the run all, what happens is it'll go through those phases. Now it's using agents now. Couple things on the technical. If you've been following me, I've been using Code, the AI, in which is an extension for VS Code. That works fine, but I'm measuring now MCP servers, which I'm still trying to figure out how to take advantage of those. I think it's going to be outside the core of this, but nonetheless, MCP servers can work and help. But when I started looking at both root code and Kilo, MCP server selection was very limited. But when I went to Klein, which is what we're running now, let me just load it up. This one, um, we're able to have the same setup as Kilo. It's pretty well standard where you have your prompting and then you have your status as the prompt generates the code. And then we also have the history, how to connect your, in my case, I'm providing my own key to write my own setup. You could use Open Router as well and still get the wide selection of models out there. So right now I'm using the latest, the latest, or to create the bots. That was done with Codex, the latest 5.3. And then in order to create this was done with the latest version of Claude 4.6 because I originally did it with GLM and Codex, and it kind of failed. It was really hard to get through. So I brought in, as usual, the big guns, the expensive guns, the Claude 4.6, which kind of coded up really nicely, and in the usual sense, in an oppressive sense, which is this is the output. Now, again, I didn't ask for all the coloring and all that; it just does it. That's one of the nice features of Claude 4.6. So the first thing it does with the phase one, it's using an agent, and then what it does, it will. I didn't know this on the um configure like the terminology of orchestrator. Now I know. It's just you have a general set of instructions that you give it, and then it will go out using multi agents running in parallel or multi model agents as well. So I'm using multimodal as well because I'm using Codex and some other models as well. So the first thing it does, it goes out and captures the news from the news feeds. Okay, so it does that. You can see here I got it in different combos. So the first one's really around blockchain and crypto. The next one would be commodities, then Forex, then Treasury and bond. And then the last one would be investing in markets. So that would be all your indices usually, depending upon the volume. So then what it'll do is it'll create the PDF. I think I'm going to show you that. Yeah, I will show you that in a minute. So I'll create that here. And then the last part is based upon all the news, it will go out and start creating all the bots. So it'll create all these different bots based upon the news. And I'm going to show you where the news and the patterns that I'm seeing when it comes to what's being created as a trading bot to be tested. And I'll walk you through that in the PDF, which can be pretty lengthy. So out of this came a Bitcoin momentum, an Ethereum sentiment, a crude oil breakout, gold safe haven, a Euro USD carry, Treasury yield curve, ES macro momentum, and natural gas volatility. So these are all the symbols used in the futures market. I could easily scale this out down the line to add in options. For now, I'm keeping it very simple to get it working, to trigger orders for once after 2, 3 weeks effort. Then the combination of the direction. I'm a long person. I don't like shorting, but if you took my futures and options course, you'll easily, from an institutional standpoint, you'll understand why you may want to understand futures and options because where the real wealth is built is not futures; it's built in um, options. As an example, right now the gold dealers, a lot of them are forced to price out what the futures market is for gold. So the futures market is very important. And then the number of contracts. Right now, I'm going to only just do one, but this is just for simulation demo purposes. So what it does, it'll go out and create the first bot using that codex. And then it will create the Bitcoin momentum, and then it'll do the Ethereum. Then it'll create the oil. Then it'll create the gold, the Euro USD, and then the Treasury yield. Okay, and the ES macro momentum, along with the natural gas as well. And then there's a summary here at the bottom. Okay, on what it's creating, what symbols it's using, da 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 da. Okay, and then it does its thing. Okay, so the next thing I think is really important to understand, like there's a technology when it comes to programming and all that fun stuff as a quant coder. But I've said before, I think these jobs are going to be done away with at some point. I personally think it could be done already because what I'm showing you is probably one of the early stages of what can be done with AI and creating bots, or what the institutions would probably want me to say is these strategies. Um, and it's proper terminology, to be honest. It's the big boy terminology. Let's put it that way. So, anyways, this is the PDF that gets generated from this file here. Okay, this file is the brunt of it. The raw file. this one right here. Let me just see if I can find it. Yeah, it's embedded here. So this is the the file that gets generated. It's massive. Okay, it's a couple. This one's kind of small, about 1,200 lines. Okay, the PDF gets that the PDF gets created from that. All the bots get created from this. So the AI will go out and choose what are the highest volume instruments to trade. That's how the AI generally, I can verify this over, I don't know, 3, 4 different models. The AI usually will pick out the highest volume instruments as a priority over others. Okay. So here we're starting with the crypto, and it's really important to understand the logic here because this is now going into the mind of a trader, more likely a portfolio manager. So it said with the quant coding jobs, those are going to be done. I think the quant research, quant coding will be done a lot by AI, and the ones that will be running all this will be um, will be the systematic portfolio managers. That's all that's going to be left standing out of all this. That's my personal opinion and the way it's going. Like I said, 30% of all hedge funds are now using not just AI to do this, but they're using what you're seeing here, agents to do this. 30% of all trades by hedge funds. That was a week ago, and I'm sure it's quickly rising. Okay, so here we're starting with Bitcoin. It does take its consideration the post-Iran conflict, flight to digital safety, gives you a whole pile of things. And again, this is not about retail. This is about institutions. Okay. So it will walk you through all the impact it'll have on open interest from the options point of view. This is more important than anything. Always look at forward looking data, specifically if you're in a very highly volatile environment and a unpredictable environment. That's why a lot of these traders cannot trade because they're not trading like this, and they're just basically um, whizzing in the wind, as we call it. Okay, so here it's focusing on perpetual swap funding. So again, it always comes back with Binance and Bybit. I don't have access from Canada for either of these. But if you do, these might be recommended. Okay, and I could, if I decide to move to a region where, let's say, I have access to either, um, I'll gladly go with them. So in here you can see we got put call skews, oil tracking the impact on crypto, and it mostly focuses on Bitcoin and Ethereum, and or this combo here, Bitcoin against Ethereum as well. So again, with the futures and options, the different impacts based upon a correlation, higher premium, volatility arbitrage opportunity. We have a big announcement here from Ray Dalio on the warning on market positioning for derivatives. Blah 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 blah. He'll make reference to the '08 financial crisis, gold futures, where it's at, what happened, blah 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 blah, and then again all the impact that goes over. Now remember, this is 30 pages. Okay, so we have here Van Eck. What's it reporting? Although the CME is usually quite a big portion of what's traded with Bitcoin and Ethereum, and also it's growing as well because it's more legit compared to Binance or Bybit because it's more tightly regulated as well, and more institutions are more confident in trading in the CME as well. So again, we got regulatory impact, um, bit mining, government mining, derivative impact from these countries here. I mean, this is just Bitcoin as well. And all of these just different things that can have an impact on jobs, liquidity, treasury, algo trading as well, market structure, derivatives, market signals, and it goes on and on and on. This is really important, very juicy, very lucrative things to know. Okay. With the one output file I showed you prior that comes from and generates this, that's probably more valuable. This particular PDF will be supplied um, probably to my Quant Elite members. That's why that price is going to go up even higher now. It's already gone up 50%, so it's going to virtually double and go up to 97 a month pretty soon because of what I'm showing you. If it works out, it's going to go up even more. Okay. So this is all institutional level news and details. So here we have I don't know, you might not have heard this, but this could have an impact on crypto between Javier Milei in Argentina with the Libra case. If you ever cared about it, but all this regulatory crackdown, Boris Johnson, blah 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 blah, Bitcoin and Ethereum futures. So this is a big part of what the AI picks. Okay, for Bitcoin and Ethereum most of the time. It will also give you an idea of when to trade and what sort of things that you should look for, the different types of triggers, the different types of targeting events, if there's a fiat debasement, geopolitical, so on and so forth. Okay. And then we have this is a bull case, bear case, black swan event. So it tells you exactly what you may need to do based upon um, what the beta is telling you. That's why any real trader, any real institutional trader will tell you what leads the market. It's the data, and then you interpret what is in the data. So here we're now looking at the energy market, which is a big factor right now because of the war with Iran. So here, what happens with the Strait of Hormuz when it's closed? There's a lot of other unseen, hidden things you may not consider. So what happens if the U.S. military strikes that island, whatever it's called? These are all current events, and these are all in response in near real time. And then within 10 minutes of running this, I can create trading bots to test out and then have them deployed into a real live trading environment for Rithmic. Okay. So again, here's the CME, what to trade, the WTI, what can the open interest happen, what to look for on the implied volatility. And it's these sort of things, understand the targeting to generate your positioning. And that's what a lot of these trading bots will do. Okay. So here's some different scenarios that you may get. Um, backwardation in near-term contracts, storage concerns, structure, on and on it goes. The option market. Again, these are things that you may not consider, but believe me, because the options trader have this information that is kind of public, but it's the dumb money, the retail trader that will be on the other side of it, and then they get the news through the mainstream. But through this method, we're getting all the news, specifically for futures, from a variety of different sources. It could be like MSNBC, Bloomberg, all the way down to Reddit, and just what some people might be, how they're trading. We also get into liquid natural gas and natural gas. What will happen if what we can expect if there's a 30% global LNG shipment, where let's say places like Emirates and the Qatari stopped production. What happens to the different hubs? Okay, you could trade each and every hub individually. And then we have gas, natural gas. What happens to each? What happens if the Trader Hormuz does get closed? Okay, and then we have this war risk uh, premium. And again, you could see here per barrel, you're getting a measurement. That's the key part to be successful in this type of trading. A lot of people are going to cry the blues. They're not making money and the market sucks and blah, 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 blah. If you trade like this, you'll be well ahead and you're pretty well going to be making potentially cash out of these opportunities. And here you have a little report telling you how to trade it with the targets and under the driving factors. Okay. It goes on and on and on. Okay, then we have currency inflation, things that get impacted as well. What happens to the US dollar, which again you could trade? What happens to the swaps? I mean, that's big boy money. We also have gold and silver. What happens to them? And what happens? This is the big one here is the fix. If you look at when the markets are bad, um, when you look at the markets that go bad, it's usually the VIX will spike to 40 as an example. And then, of course, you have OVX as well, which is an ETF, I believe. Then what do these central banks do on reshaping the commodity on the option space? So again, if I was trading on options and those calls become correct, and my bots are developed for what they see in the price data, then yeah, there's money to be made here, quite possibly. Okay, then we have all the central banks and what they do with their currencies. Again, gold, oil, impact, and the price controls that could be brought in to control their economies if this does get out of control. So these are the sort of news events you may not think of. They may not be seen, but one I knew a week ago with jet fuel prices increasing, that's now coming out into the mainstream. But that was already announced through these news feeds a week ago. And that was for who specifically? Futures and option traders. Okay, these are things that are not factored in. So this is where it gets very interesting. If you want to be making money successfully at real trading, you want to be in futures and options. I've been saying that for well over a year and a bit now. And there's a lot of reasons because you can hedge, you can speculate as well, being on which side of the options that you want to be, or you could be an option or hedger. And then unfortunately, there's the retail trader, and then they'll go into these leverage ETFs and probably get killed over the long run. So again, you can see what happens here, what all the hedge funds are doing, all the macro traders, Bridgewater, Citadel, what are they doing? Quant funds, what are these guys doing? The Renaissance, the Two Sigma. So you can see here that's coming out of the news feeds, what they're telling you, what they're doing. Everybody seems to think that there's one static algo for all market conditions, all market regimes. No. And here you're seeing how these hedge funds are operating and what they're trading, and specifically what types of strategies they are trading. Increased momentum based trading in energy futures and amplifying the volatility. Okay, or that's what increases the volatility. So you can now start sound like a fancy pants person because we know what's creating the volatility. Well, it's because of the quant fund, hedge funds, or whatever. And again, you can see from across different industries, airlines, European utilities, Asian LNG. And then here we get into the retail trader. What are they going to move into? Probably these. And then you're going to get killed on the gamma squeezes. So what happens to these ETFs? Well, they go down. And yet again, the retail crowd does not know why. That's okay. You don't care about them because you want to trade like an institution. And the news here is giving you all that. So of course we have social media driving the prices and broker funds or exchanges platforms are going to report stuff on the micro CL and so on and so forth. And then other opportunities exist in a more professional is basically so you have impact if there's a stagflation. All these different things you could trade if you have a big enough account. Eurodollar, inflation-linked swaps, Fed pull options, FX derivatives, and again, you could trade maybe the U.S. Canadian dollar combination, or the Australian Japanese yen, or the EMFX. Again, this is emerging market like the INR, the or the Pakistan extremes. But again, extreme depreciation as import bills balloon. So each and every one of these are an opportunity that you can look at from a human manual basis. But again, the trading bots that I'm using or that get created by an AI is again because of high volume asset classes. Okay, so I could go on and on and on. And now the new geopolitical risk premium in future pricing. So we're already seeing things again farther down the line. We have a war risk premium, decline of just-in-time markets, mercantilism. You never say that, and so on. So what do we do? How do we trade in a high volatile energy derivative environment? So here they are. Okay, all the different ones, and some of them will include targets as well. And what do the small retail traders do? Well, here you go. And then again, you got the macro and options market analysis. Again, this is where the real money is going to be laid out. How does it impact the general economy? Right here. The general market reaction, commodity market repricing, geopolitical escalation on the Middle East, and specifically, it will have housing and consumer data signals that come out of it. Are those trading opportunities? You betcha. Again, it just goes on and on again. Straight at Hermuse, what you do with WTI and pricing, all the options market lays it all out. Again, you can see here the targets. Nobody else will give you these targets, but using the methodology that I'm using, plus getting targets and the drivers, it's a simpler way to trade. That's for sure. Um, then we have the correlations that a lot of people never consider. Crude oil and gold correlation breakdown, inflation linked derivatives. And then, of course, what happens if the EU Navy responds, maybe like France or something, I don't know. And then here you have all the different types of strategies once again and the different conditions to trade. What happens if gold collapses? Forget all those doom and gloomers and the gold bugs and all that. These are things that people might not consider. What happens if gold collapses? And again, it goes into it right here. If it drops below 5,000, it could be rising US dollar, or that's where the money goes. Maybe people might put money into stable coins. Those are up and coming opportunities. Again, you get all the targets from fell 4.6% as a data signal. Okay. Open interest declined 8%. Okay. So there's less institutional interest in gold as of tonight, March 15. Okay. So gold will fall maybe tomorrow because of new shorting that comes into the market. But again, a lot of the gold bugs may not tell you that. The retail, the doom and gloom scrollers and all that may not understand any of this. But here you go. All of it's right here. Okay. And all the different conditions and how to trade it. Again, you can trade it against gold versus oil with the hedging and potentially even volatility arbitrage. These are golden opportunities that people will not know, especially if they got in the futures and options market. Okay. Then we get into Forex, the currency wars and intervention. So this is one of the spots that was chosen, the euro, US dollar, and here's the drivers right here. And then, of course, it will tell you the futures positioning, how to trade it. Hopefully, these are going to be built into the bots. And if I was to go into the options, how to trade with the options, once again, this is amazing. We can build on top of these conditions. Look at this. So long Euro USD straddle ahead of April ECB meeting. Okay, you can easily get that data once it becomes public through a newsfeed. If Lagarde signals dovishness, IV will explode. Okay. Then we have the same thing on intervention from Bank of Japan with USD against the yen. Blah 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 blah. Intervention. Here's how to play it. Again, you can see Japanese call butterfly. Buy 145 call, sell to 150 call, blah, blah, blah. EOJ policy hedging. This is what the institutions are doing. Okay. That is a guarantee. Okay. I just showed you what Rentec are doing, what Citadel's doing, but you won't know about that through your Bloomberg or MSNBC for sure. Then we have the Australian dollar resilience and what the RBA is doing and how maybe New Zealand's being impacted by that. We also have interest rate futures. I mean, man, oh man, it just does not stop. Okay. And what the ECB and the Bank of England are going to do, and the different types of, never heard of this, stir futures, opportunity, volatility, and tail risk. Okay. Um, Regional economic data and as derivatives, so it can have an impact on the UK housing market. So here we look at what are we looking at here? Just the general options and futures market. But all the different drivers and the things to consider. Geopolitical. Okay, again we have oil, energy and infrastructure and the impact of it. And again, all the correlation, options positioning, because that's where you're going to make real like mad money if you get the calls right. Usually it can happen, and if it doesn't, it tells you what to look for when it doesn't happen. And again, you can use the news feeds to measure that, and that's already kind of built in. Here we have natural gas and the refined products on heating oil and RB. blah blah blah, geopolitical and the impact on that, and how it impacts maybe the treasury, gold options, and again euro yen and blah blah blah. Here we have OVX versus the VIX diversion. It's nonstop, folks. It is nonstop. I could go on. Housing collapse and derivative exposure. I mean, if you own a home, wouldn't it be nice to know what could happen? And again, you see here the different REITs and the ETFs that are available to trade if things happen, short it, long it on interactive brokers. So here we do get into some equity like stocks on Nvidia, how they're spending like crazy, and here some of the ETFs you could use and the OTM, out of the money options. And again, a lot of the equity traders are going to use stock options and no, I don't think no stock options. We'll leave it at that. And how you it will impact other elements, rare earth, copper, lithium, cobalt, and the like. So you can see here what the billionaires are doing. Here's a quote for David Tepper and Michael Platt. Sold Nvidia shares, bought the AI stock to climb 40,000% since its IPO. Okay, so that's here's what they're suggesting: call buying an AI ETF future, AIQ, and bots. And again, more. AI driven trading in derivative market, algo options, market making. Again, big drivers: Citadel, Jane Street. So these dominate the option flow for NDX and SPX. AI driven volatility model, deep driven for mixed forecasting, here's reducing human discretionary trading. And again, that's where the things on taking advantage of the human traders, the retail traders. So here, the crowd will always use their zero DTE and the like on, let's see here, VIX futures, short interest and borrowing. So if you want to trade on interest, you could do that. And again, you can see some of the impacts here on some more ETFs, along with put demand and futures for SPX. So here we have some other interesting calls on XRT and IBB ETFs as well. Future basis trades. Okay, if you know what a basis trade, you'll have taken my futures and options course. Okay, it just goes on and on. And again, we have healthcare and the biotech and what's going to happen there, on how to trade it. Okay, right here, you can call both on the IBB and XBI, commodity linked healthcare. So you have sugar futures and palladium. So right here, why? Used in bioprocessing and palladium for catalytic converter demand. So you could trade either of those on the futures market. Here's the other juicy stuff again you want to know: institutional flow into healthcare options. $20 billion biotech investment, likely call buying in IBB futures. $5 million in 110 plus percent biotech stock. Put spreads to lock in gains. Okay, they're telling you exactly what they're doing. I just don't understand. I really don't. Okay, so again, we have cross driven, long NQ, short RTY, housing. Once again, we have here other ETFs, ITB, ZB futures, MBS futures. And again, how to work it. The key takeaways here. Okay, both healthcare, short interest, AI capital flow, deflationary consumer, geopolitical. You will not get access to this through the mainstream media. Okay. Again, what happens under these conditions? Fed easing, repricing, AI capex boom, housing collapse, or short squeeze risk. What to do? So again, more about the analysis, options, trends, strategies, macro implications. So right here, we're getting into all the different strategy types: global yield curve, dynamic interest rates. And this is again and again in a collapsing market that has been heavily impacted because of this new war. It's just that new catalyst is grinding everything down. But here you're getting actual um, real time opportunities and what to trade. no different than what the institutions are doing. But because the AI is able to create the bots as close as it can for price based upon these scenarios, they should work. And even if they don't, that's why you run it in a testing environment for, I don't know, half an hour. You see what's trading at that point, and focus on those trading bots and deploy capital, which is really driven by those hopefully profitable bots as well. So you can see here inflation on the retail crowd, geopolitical risks. Um, some of these sources are supplied. Tony Zhang, options play, what he's doing, I guess. I've never heard of him. Some of the other opportunities in this Iran war, inflation right here. So here's some news that is important to know. Target, Walmart, same stores fell 2.5% year over year, while Walmart indicated consumer down trading. Again, you can see all the different news and how it impacts. Here's the direction S&P bull, 3-time pro share, ultra pro, QQQ, high beta instruments that amplify daily moves in the S&P. So you could see here what it's telling you, what to do, how to assess it, and what to buy. So do the TQQ because it's slightly cheaper, expenses. I mean, it's pretty convenient stuff here. And again, trading strategies right here. Okay, and what to do in these instruments. Commodity futures again, energy, metal, agriculture. Okay, natural gas, volatility. So when you see the bots for natural gas, the volatility right here, the crude oil, the breakout, that bot came from most likely here. Gold, the conditions came from here. So the safe haven demand. No agriculture bots were created for obvious reasons because the volume is fairly low compared to the other instruments that could perform better. So here we have usually, if you go to a bar chart, most active, yeah, 10-year Treasury is one of the most top traded instruments out there when things go bad. Sometimes you'll see this overnight futures trading, the SR3 as well. And again, it will walk you through all the different types on the VWAP. The retest phenomenon in futures. Nobody's ever heard of that. So this will tell you price will break your magic level, look like it's gone, then trade back, grab liquidity, stop out, break down, participant who played their short long in the same exact spot, 2 ticks from the entry, and price will reclaim your magic level and go where you expect it to go. Again, these are all the different combinations based upon that. Risk management, how to trade squeeze, short squeeze, blah, 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 blah. It's like a roadmap, man. It's crazy. Structural regulatory risks and considerations, okay? Gives you all the different scenarios, okay? And this changes every couple hours based upon what the news feeds are. Okay, so coming back to this, it's too exciting to let go. So here you can see what was created recently was Bitcoin futures momentum, crude oil breakout, ES or SP 500 macro momentum, Ethereum futures sentiment, Euro USD Forex carry, gold safe haven, natural gas volatility, treasury yield curve. So all of those came from that PDF. And you can see these are usually the instruments that get traded. Why? Because again, it comes back to the volume. Okay. So all of that's there. And the thing is, if you joined my at Quant Labs Net, let me just see here. If you join, yeah, here, I'm typing with one finger, right here. Go to the main site, quantlabsnet.com. What you'll find in here is a couple of things you need to be aware of. If you want to join the Learn, get a free ebook on HFT, C++ stuff, you can do that. That'll be immediately available. Here, if you're really, really interested in this, I will give a 7-day trial. I may end that. This stuff is too valuable. This price just went up this week. Okay. So this will go up to $97 very soon, especially if the trends and the real time trading start to show profit and that workflow becomes consistently profitable. This will skyrocket for sure. Um, as well as what I was going to show you here. If you just join the website through the Learn tab, you'll get access to this group. We got 500 people in here. I post stuff in here all the time. You can post your own stuff as well. I've also got a new WhatsApp channel that you can see what's being posted among my HFT code website, hftcode.com, and this site, and even my Substack as well. So that's all free. But to get the juicy stuff, all the profitable stuff, yeah. And right now, it's all going to go up. So if you want to know how to get into things like algo trading, all the time I get asked, where do I begin? If you go to hftcode.com, this is where I send them. This will go up as price as well, from 30 US to $60 US. On top of that, that's for interactive brokers for free. If you want to see a sampling of a HFT related C++ uh, algo in Bitcoin, you get this. We're creating another new product that's similar to this, but it's going to have all the updated stuff with um, the Klein AI that I've got here. It'll be similar, but specifically going to be geared towards people that want to learn about trying to get a job or a career. I don't know why they will, because as I said, it's going to get harder and harder and harder. And I think it's going to be, with what I'm showing you here, with agents. I just don't see how the quant coders, the quant researchers, and the like will survive long term. I just really don't. Anyways, I'm going to stop it there. Thanks for watching. Hope you had a good time on this video. We shall talk to you later. Over and out.